Hello, my name is Brad McMillan. I'm Commonwealth's Chief Investment Officer, and thanks for coming to the July market update. The big story this month, and indeed for the quarter, was the shocking revision to the first quarter economic growth numbers. We knew it was bad. We thought it was bad, -1%. It turned out to be almost 3 times worse. And the real question we have to ask ourselves is, does this mean the recovery is in danger? The short answer, fortunately, is no. There were a couple of things going on. We knew about the weather, but the real problem in the revision seemed to be the difficulty in measuring healthcare spending. The start of the Affordable Care Act, Obamacare, really seems to have messed the numbers up. And it looks worse than it very probably was. We're also going to see some changes in the data going forward, but I think at this point there's nothing to worry about. And the reason I say that is we're actually seeing very, very strong numbers as strong as they've been since before the financial crisis across most of the rest of the economy. If you look at employment, for example, almost every single metric we have is pushing back to levels from early 2008. If you look at wage growth, you look at the overall numbers, they seem a little disappointing, but if you look at the numbers for 80% of the population, it's actually considerably better. And when you consider the fact that people are working as many hours as they have been, again, since before the financial crisis, actual wage income is up over 4%. This is a very, very strong performance. And it says to me that, hey, the recovery is continuing, the recovery is strong. In fact, I think the recovery is accelerating. The financial markets have reflected this. Both for the month and for the quarter, markets around the globe gained. Again, we don't see that often when everything's going up. We saw the second quarter of gains in bonds, for example, for the first time since 2012. There are a number of very positive factors. We've seen earnings growth continue better than expected, despite some downward revisions to expectations. U.S. markets have hit records multiple times. They continue to move higher. There's very, very little negative to say at this point. But let's look at the risks. There are risks out there. One of the real risks out there, we've seen turmoil in Iraq. And the problem with Iraq is that can affect oil prices, which has a direct effect on the U.S. economy. I'm not that concerned about that yet for a couple of reasons. First of all, Iraq only accounts for about 5% of the oil provided to the U.S. So it's meaningful, but it's not huge. Second of all, if you look at where actually the oil comes from in the U.S., it's mainly Canada, Saudi Arabia, and Mexico, both of which are quite stable. Third of all, the growing production in the U.S. has helped to moderate any potential price swings and insulate us in many ways from this kind of turmoil. To sum up, we have 3 things going on. We have the economic recovery continuing and strengthening. We have risks, but they're relatively moderate risks. And we have financial markets that are reflecting the pretty good environment we're now in. Hope you have a great holiday. I'll talk to you next month. Thank you.